let me share with you one of my trading accounts and what I've done over the last month. Hi, I'm George Fokas from Fokas Beyond. I'm currently in Cyprus on a business trip. I'm sitting in my hotel room. I am going to get ready soon to go to another meeting, but before I do that, I wanted to share with you what I've generated in one of my accounts over the last month, just so you can see the power of what Fokas Beyond teaches all around the world over the last 18 years. So you see on your screen, and I want you to bear with me. For some people, we're not great at maths, and that's okay, but just bear with me and have a look at the profits and the income that I have generated in my account for as little as 10 minutes to get into the market and earn a profit on my investment. Some of you would know what I do, some of you don't, and that's okay. Sit and listen and understand how to make money work for you instead of you working for money. I'm sure you all agree most people around the world work hard. A lot of people are sick and tired of being sick and tired. The biggest thing right now with a lot of people, and the reason why they're not investing, is because of fear of losing money. With what I teach all around the world, and please understand, I've been teaching this for over 18 years. I've personally been doing this for over 24 years. The biggest thing you need to understand is this: you will also learn how to protect your money in the markets. Because being in the market, investing your money, you want to be in it for the long term. The stock market is not a sprint sport. Slow and steady wins the race. See, a lot of people think, I'm just going to put $500 in, $1,000 in, and I'm going to be a millionaire in a year. It doesn't happen. The reality is it doesn't happen. Slow and steady wins the race. But let me share with you what I've done in my account, and I want you to compare the profits, the returns that I've generated to other strategies out there, whether it's property, whether it's money in the bank, whether it's businesses, whatever it is, other strategies in the stock market. I would like you to compare, and then I would like you to let me know what you think. So let's get started. Let me share this with you, and bear with me. Come along and I'll explain a few things. Number one, as you can see on your screen, is the date that I got in. I actually placed 2 trades. I'm going to share both trades with you in this account, in this time frame, on the 31st of January 2024. So have a look at that. 31st of January 2024. Now, directly underneath number 1, where you've got the 31st of January 2024, you'll see 1:30 and 4 seconds. So you can understand how quickly we go into the market. At 1:30, now this is Sydney, Australia time, because I'm based in Sydney. At 1:30 Sydney time is 9:30 New York time when the US Stock Exchange opens. Within 4 seconds of the market opening, my order is in the market, and I've made an income and a profit from day one, and I'll show it to you shortly. So on the 31st of January, I got into this particular trade. I bought it for $19.18. So just keep these figures in mind, $19.18. So I outlaid some money. I paid $19.18. What I did on this particular trade is I created a contract. Now, I'm not going to get into it too deep now. I just want you to understand. I bought a stock and I've put a contract on it. And if you look at the date, number 3, it's exactly the same date and time as the time that I bought the stock. So all these happened at the same time. I bought a stock and I put a contract on that stock at the same time. Now, this contract that I put onto that stock has paid me an income. And that contract that I've put on that stock goes from the 31st of January. Now, you can see number 4 on your screen. It's until the 2nd of February 2024. So work that out, 31st of January till the 2nd of February. That realistically is 2 days, but in fact it's actually 3 days, because the market trades on the 31st, then the 1st, then the 2nd. So it's a 3-day contract. So I've put a contract on my stock for 3 days. And what that says is, my contract says I am agreeing to sell my stock in 3 days at a specific price. And you can see number 4 there, 19.5, which is $19.50. I'm agreeing to sell it at. Now, I bought it for $19.18, and I've put a contract that says I'm agreeing to sell it at $19.50. Now, the person who's bought my contract, and once again, let's not go into too deep. I just want to prove to you the money that we make. And not only the money that we make and the money that I've made over the last month. The biggest thing you need to understand is this, folks. Society has taught us all our lives to work hard for our money. Society has taught us to put time and effort in, and your hard-earned money into investments to see a return when. Think about that. We are taught to see a return when? At the end. You work for your money, you get paid at the end. You've got to put time in. If you put money into the bank, you get paid at the end. You've got to wait for the term deposit to mature. If you go and buy property, for most people, they see a return at the end when they sell it or if they pay the bank off. People put money into the markets, not just the stock market, but into the markets. Bitcoin, Forex, commodities, stocks trading, options trading, ETFs, indexes, warrants, all these sort of strategies in the markets. And people are waiting for a profit when? At the end. The biggest thing that differentiates me to everybody else and what I've been teaching for over 18 years, now please understand I've been doing this for over 24 years. The biggest thing that differentiates me to everybody else is we get paid our profit, our income, our cash flow from day one at the beginning of our transaction, not at the end. Our profit is paid at the beginning of our transaction. The moment you go into the market, you've got your income paid into your bank account. You don't have to wait for it. So in this transaction here, I bought the stock for $19.18. I put a contract that says for 3 days, I'm happy to sell it at $19.50. And they paid me immediately 21 cents. So keep that in mind. Bought it for $19.18 and I received 21 cents income on that trade immediately. Profit in my account. Now, what happened? 3 days later, that stock went down to $17. I bought it at $19.18. Now, a lot of people would go, but George, oh my gosh, what if the stock goes down? So let me explain this to you. What if you buy a property and it goes down in value? Do you still own it? Have you lost any money? No, because you still own it. It's only on paper. It's not a physical loss. So the stock went down. I kept the stock. What do I do now? I go back in and create another contract. Number 6. On the 7th of February, I went back into the market and I created another contract. Now, look at point number 7. I did the contract from the 7th of February to the 23rd of February, right? And I've agreed again to sell it at 19.5, 19.50. But that stock went from 19.18 when I bought it 3 days later to 17. Do I care? No. I've done a contract now at 19.50 and it's paid me 19 cents. So we'll come back to the percentage returns and all that later, but just bear this in mind. I've bought a stock, it's paid me 21 cents. That contract goes, I've still got that stock, I do another contract, it's paid me 19 cents. So let's look at this now so you can understand this. On the 31st of January, I bought a stock for 19.18, paid me 21 cents. Now if you look at that for 3 days, that's a 1.1% return for 3 days, 1.1. Now let's look at globally what the banks are paying in interest in a term deposit. So let's just say you've got a sum of money and you're too scared to invest and you just put it into the bank. In Australia, the interest rates right now are just under 5%. In Europe at the moment, depending, it's anywhere between 2 to 4%. In America, very low, about 2 to 3%. A year, that's per annum, that's a year. Right? Now, some of you might go, but George, there's a particular country that's paying a little bit higher. Great. Even if we use the 5%, even if we say 6%, I've just earned up front in my account profit, no matter what the market does in 3 days or what the stock does in 3 days. I've earned 1.1% profit in my account for 3 days. But then the stock's gone down. I've done another contract that's paid me 1%. So realistically, for 2.5 weeks, I've made a 2.1% return. Let's just say 2%. Today, I'm doing this recording for you and I want to prove something to you. I want to share with you what the current price is because that contract on the 23rd of February cancelled, expired because the stock not only went down, it stayed down at around the $17. So I want to share with you right now what is the price of that stock because most people would go, but George, if the stock goes down, what happens? We still go into the markets and we have the opportunity to create more contracts to give us more income, even if the stock goes down. Because the biggest thing you need to understand is when you're putting your hard-earned money into an investment, why are you investing? What are you looking for? This is one thing you need to ask yourself. What do you want from your investment? Do you want capital growth, capital gain, or do you want cash flow income? Because the biggest thing you need to realize is we can't eat capital gain. We can eat cash flow because cash flow is immediately banked into your account. So my investment strategy that I've been teaching for over 18 years is a cash flow strategy. It's not a capital gain or capital growth strategy. I want you to have cash flow because the biggest thing people are looking for is cash flow. A lot of people are asset rich but cash flow poor. So how do we change that? So have a look at this. This is as of today. So today, just so I can be upfront and honest with all of you, today is the 1st of March. I am sitting in Cyprus. It is the 1st of March. That contract that I created expired on the 23rd of February. Now, over the last couple of weeks, I've been traveling all around Europe, So I haven't logged into my account because I've been traveling. So my stock that's been sitting in my account is just sitting idle. And you're probably going, but you're not making money off it. No, I'm not making money off it, right? But I've already made 2% in 2.5 weeks. So if I wait another week or two, it doesn't matter, because if I had that money sitting in the bank, I'd be earning 5% a whole year. I can't do anything anyway. But I've done 2% in 2.5 weeks compared to the 5% a year. So let's have a look as of today, 1st of March 2024, where's the stock? But before I show you where the stock is, I want to also share with you shortly the money that we could be earning as of today going into the market, what I can earn while the stock is down. So what's the price of the stock right now? $17.64. That's the price of the stock. Now remember, I bought it for $19.18. It paid me 21 cents. It paid me 19 cents. That's income that I can physically use to either reinvest, pay down home loans, eat it, live off it, spend it, do whatever I want with it. That's cash flow sitting in your bank account to do whatever you want with while the market is going up and down. What is it that you want from your investment? So please understand this now. Today, I have no contracts. I've got nothing in my account other than just the shares, just the stock. The stock's currently $17.64. So I can now, which I have, gone back into the market to do another contract. So I want to share this with you. I'm doing a contract up until the 15th of March 2024 for 13 days. So I'm doing another contract for 13 days. I'm going to do the contract at $19.50. What's the price of the stock? $17.64. Stock's at $17.64. I paid $19.18 for it. And I'm putting a contract at $19.50 while the stock is $17.64. And how much are they going to pay me? They're going to pay me between 26 cents and 28 cents. Point number 4 on the computer, on the screen. The person on the other end in the market is willing to pay me between 26 cents and 28 cents for a contract for 13 days at $19.50 when the stock's at $17.64. So realistically, I've put an order in for 27 cents to meet in the middle. Now that order is going to go in on Monday because today the market is closed at the moment. It's the 1st of March. The markets have closed in the US. So next week I'll probably earn 27 cents for another 13 days, 2 weeks. Now when you work that out, even if that was 19 cents, 1%, plus the other 2% that I've made, so 2 plus the 1 is 3% over 4 weeks. While a stock has gone down, I've made 3% for the month. Now, work that out, what that income is a year. Annualize it. Look at the potential there, right? Compared to the 5% the bank's going to give me a year. So that is where I'm at right now in that position. Now, with this recording, I will also share down the track the income that I actually made from this contract as well. So another 1.4% for 13 days. I've just rounded it down and said 1%. So the 2% plus the 1%, it's 1.4, but let's just say 1. 2% plus the 1% is 3% for a month. And all I need to do is be wherever I want to be. I click 10 buttons on my computer. It takes about 10 minutes to do. And I've made money from day one up front in my account. I've got my profit, my cash flow in my account, my income paid into my account at the beginning of my transaction. Now let me share with you the second trade. Because remember I said to you I placed 2 trades for the last month. So let's go back to this screen. This is my trading account. This is a live account. This is real money in one of my trading accounts. So have a look at this now. On the 31st of January, at the same time as the previous trade that I just explained, I bought a stock for $70.28. $70.28. Now keep that figure in mind. $70.28. I did a contract. So let's go back down to number 3. I did a contract on the 31st at the same time. Now this one got in within 51 seconds of the market opening. The other one went in 4 seconds of the market opening. But it took 51 seconds to go into the market once the market opened. That's how quick it goes into the market. So I bought it for $70.28 and I did a contract. Point number 4. You can look at point number 4. I did a contract at $70. So from the 31st of January to the 2nd of February, 3 days. How much did it pay me? It paid me $1.84. So for a 3-day contract, I earned $1.84 up front from day one, no matter what the stock or the market does over the next 3 days. That's profit, that's cash flow, that's income. Over the 3 days, the stock and the markets can go up, the stock and the markets can go down. I've made money. I've made my $1.84 no matter what. 100% in my pocket, profit I've earned from day one. What did the stock do? Stock went down. Right? Stock went down. Do we panic? Do we care? No, because we're following a process. We're following proven practical principles that I've been implementing for 24 years and I've been teaching for over 18 years. You're following a system, a checklist. So what do? We go back into the market. On the 7th of February, look at point number 6, 7th of February, I did a contract to sell at 71. Now it goes from the 7th of February to the 16th of February. And it paid me 79 cents. So I earned just over 1%. So I got my $1.84 before. I've gone in and done another contract, earned another 79 cents. Now, at the end of that contract on the 16th of February, guess what? Stock was down. So it had gone down and stayed down. Do I panic? No. I've made $1.84. I've made 79 cents. What do I do now? I go back into the market. I do another contract on the 21st of February. I do another contract now to sell at $70. So my contract is to sell at 70, right? So, how much do they pay me now? Point number 11, $2.70. But this is the kicker. This is where I want you now. Please pay attention on your screen. Go to point number 9 and point number 10. I entered the market with a new contract on the 21st, and that contract expired on the 23rd. So, 21st, 22nd, 23rd, 3 days. So for 3 days on a $70 investment, I earned $2.70. So let me share this with you, because guess what happened on the 23rd of February? So remember, on the 31st of January, I got in at 70.28, and that stock 3 days later was down. And then during the month, it stayed down. And on the 21st of February, my apologies, I did a contract to the 23rd. Excuse me. What happened? Point 12 and point 13. I sold the stock at $70 because the stock went up at the end. And I was able to sell the stock at $70, which is what the contract price was. So point 12, you can have a look and see on the 24th of February, which is on the Saturday, I sold the stock for $70, which is point number 13. So let's have a look at this. On your screen, you can see I got in on the trade on the 31st of January. I bought it for $70.28 and I received $1.84. Contract expired 3 days later, stock went down. The $1.84 that I received is a 2.6% return. 2.6 for 3 days. 2.6. What did the stock do? It went down. Is the 2.6 sitting in your bank account? Oh, sorry, it's not sitting in your bank account, it's sitting in my bank account. Yes, it is. Stock's gone down. The uneducated will panic and freak out. But the educated who are following a system and a process know exactly what to do. We go back into the market, we create another contract, 79 cents for 9 days, 1.1%. So not only did I get 2.6, I got another 1.1. Then what did I do? Go back in for another 3 days. I received $2.70. That's a 3.8% return. 3.8% return for 3 days. So when you work all that out over a period of basically a month, or just under a month, of my stock going up and down with whatever the markets are doing, my stock and my income my capital that I've put into the market is earning me income while the market is fluctuating up and down. Because why am I investing? I'm investing for cash flow. So over 4 weeks, it's actually under 4 weeks, it's 3.5 weeks. I've just rounded it up and said 4 weeks. I've made a profit of $6.05 on a $70.28 investment. That's an 8% return for a month. So currently I've got a position that hasn't closed that's earned me basically 3% for a month. And I've made 8.6 for a month on this trade. So let me tell you something. Is your money working for you and earning you this? Because if it's not, this is the opportunity that you need to pull your finger out and do something different to achieve a different result. I'm George Fokas from Fokas Beyond. Thank you for watching. I'm running a series of events. They're all online, so all you need to do, you need to click a link, go to my website, focusbeyond.com, spell focus, FOKASBEYOND.com, register for one of my upcoming events. Give me your time. Allocate 3-4 hours. Listen to me. Let me explain step by step this process, and it'll blow your mind. You will be amazed at a strategy that's been in the markets since 1973 that most people don't even know exists. That pays you cash flow from day one up front in your bank account, no matter what the markets are going to do in the future. In addition, remember I said to you, I'm going to be teaching you, very, very importantly, how to protect your capital in the markets. I allocate one whole chapter to money management, risk management skill sets, because process is key to your success. So when you follow a process, proven practical principles and a structure, that's how you build your wealth long term. And that's what I'm here to do for you folks. I'm here to work with you and teach you. Go to my website, click on the link, register, watch my upcoming event. I'd like to see you there, and I'd like to help you in 2024 build your cash flow. Thanks for watching, take care, and we'll talk soon. Bye for now.